Hello, investors. It's been a good month for your portfolio. Your portfolio is north of 4% returns for this month, and the markets also have been good. Uh, in this runaway bull market, I get calls from investors every day asking me that where are the red flags? Very often, people are nervous about the runaway in the market. They feel that there is a very big mismatch between the underlying economy and what the markets are doing. What is it that gets me worried? For me, what keeps me worried at night or where the red flags are is really this whole play out of the Robinhood trade. So, what is the Robinhood trade? Robinhood trade is nothing but a lot of retail investors have got very, very active in the market. And this is not just in India, but even in the US. You find that people have been staying at home because of COVID. They all have access to computers. And with a little bit of savings, most of them have started playing the market. Very often, these things are rewarding because there is momentum and liquidity. But retail investors typically get into the low price stocks, stocks that are under research, stocks that are very beaten down and that have momentum. And I have seen this with over 30 years experience in the market, whether it was the 2000 IT bull market, 2008 financial market crisis, that the pattern is again playing out where the lot of retail participation has come in the market based on WhatsApp tips, whatever friends are saying or whatever a TV anchor is saying. People have been playing the market, and obviously they have been getting very good returns. So this attracts more money. But as time passes, the quality of investments that they have are very, very poor. And as and when markets correct, we realize that even a small correction in the market wipes out this league of investors very, very fast. The reason is that the big thing is that the stocks that they get into or they get dragged into towards the end of this rally are very, very poor in quality. In other words, they're stocks with no real great fundamentals. Even if markets correct, if your portfolio is of good quality, quality is defined by companies that are consistent profit making, you realize that the fall is less and the recovery happens faster. So for me as a fund manager, the challenge on a day-to-day basis is that I look at the markets with a little bit of frustration that we build very good quality portfolios, but it's always the tips and the small caps that are doing better. But it's important for me to be careful because I am a custodian of your wealth. And for me to control risk is very important. And the best insurance for your portfolio is to be in companies that are fundamentally solid. Corrections will come. However, to navigate it, to be able to run through the next bull market, you must have stocks that have quality because they are the ones that last through cycles. So let's this month assess your portfolio. We've been talking about as a quality portfolio. So what exactly is the nature of your portfolio? How have these companies done? Because we've just finished a quarterly numbers sharing by these companies. So let's really see how these companies have performed, and let's assess your portfolio on the fundamental parameters. So what you see on your screen is 22 stocks from your portfolio have come out with numbers so far. So we have classified them into three screens. One is the positive numbers, second are neutral, and third are quarterly. So this is really the list of stocks that we feel have come with positive numbers. And you can see it in the numbers that are shown in the columns. So the first is YOY sales, the second is operating profit, and third is operating margin. These are YOY. YOY means that these are numbers for the quarter Jan, Feb, March of 2021 compared with Jan, Feb, March of 2020. And both these months have been very dramatic because Jan, Feb, March 20 was towards the end of March, we got into a lockdown. So we had companies that have almost had very good 2.5 to almost 3 months in the previous year. However, in Jan, Feb, March, we were under semi-lockdown or semi-open. So these companies have had a very difficult runway compared to a year ago. So if companies are able to report very good earnings growth in this quarter, that is Jan, Feb, March of 2021, I think it is very impressive. So here you have the list of companies. Like you will see Abbott, the sales have grown up YOY almost 14%. Operating profit is up almost 48%. And there's also been a margin expansion. Of course, we look at companies at various more parameters. However, for purpose of simplicity of this presentation, we've just kept it to three things so that you get your head around that what we have invested for you, what you're holding is actually very good companies. Even in challenging times, you'll see that they have been able to do very well on these three very basic parameters. And that's why out of 22, 18 stocks is where we are very positive. Abbott, as I said, again, everyone knows a very quality pharma company, which actually has not done much price wise because they had flattish quarters. However, what you see in this quarter is a very good jump in top line growth, and we think that it can recover. Atul, specialty chemicals, excellent operating profit, YOY growth. Berger, the whole paint industry has been doing great, 50% top line growth, a big play on home improvement and housing. Deepak Nitrate, specialty chemical company, look at the operating profit growth, so on and so forth. DV is immaculate, Gujarat Gas, utility company, but still very connected with the revival, the industrial revival that's happening. In the banking space, we find that the shift is happening towards corporate facing banks. So you see ICICI Bank, you see the margin expansion that's happening, L&T Infotech, Muthoot. So we just go on and you can see this list of 18 companies where we feel the numbers have been very impressive. What we are going to do is that apart from this video, I will also be sharing you a PDF of each of the 22 companies with a one pager. So you will actually have a deep dive insight into your holdings, the kind of earnings that they're coming out with, and the kind of performance and our justification. So there will be a very good document that will accompany our update on the quarterly numbers of your portfolio. But prima facie, the objective is for you to see that how you are holding a very, very high quality portfolio. This may not be what may look attractive to retail punters, day traders, but as investors, as I said, as custodian of your wealth, it is very important that I keep mentioning quality, quality, quality. Quality is nothing but you will find performance in all three columns. Of course, all fruits cannot be the same. So 18, we think were a very good strike rate, impressive numbers. Some which we found were neutral. Neutral is not that we are disappointed. Absolutely. It's just that it makes us stand up and watch these companies more closely. One is HDFC Bank. So HDFC Bank again has been a marquee stock in the Indian markets. But what we find that in the last 1 or 2 quarters, things are plateauing out. And this is really our shift that we've been talking about from private banks towards private banks which are more corporate facing. And that is really evident in the move in your portfolio towards ICICI Bank and SBI rather than HDFC and Kotak, where we are actually reducing our position and transferring those monies to these other corporate facing plays. The other stock, which actually had very good run rates, very good performances, but we feel has kind of flattered down is a bit on the pharma space, which is IPCA. Again, as I said, no red flags yet, but these are things which we would have preferred if they were in the earlier list, where the growth rates would have been more spectacular. The third list is where we are concerned. That means these are companies that have disappointed us. One is Honeywell Automation and second is Kotak Mahindra Bank. Again, great companies, great businesses. As I said, that is something you will find running throughout our portfolio. However, when quarterly numbers are not so impressive, we tend to take a greater look at them. Honeywell is a great play on infra. It is a much, much superior businesses to its peers like Siemens, ABB, and Thermax. However, this is very linked to the GDP growth. And as and when the GDP growth, because of COVID has slowed down, you do see a slowdown in Honeywell. However, we feel that as economic activity picks up, Honeywell will bounce back very sharply. An area of concern for us, as I said, has been some of these private sector banks. Kotak Bank is one of them, and you can see it in your numbers. So we are very likely to reduce here and move into, as I said, the commercial facing banks. We like SBI because we feel that SBI could be a great play, a turnaround that has happened in the banking space. So this really summarizes our three broad classifications of stocks in your portfolio. As I said, we will send you a PDF of each company with a one pager on those. So you'll almost get a 22-page PDF, which will explain each of these factors with a lot more numbers and a lot more analysis. But this really shows our thought process and what you are holding. So for us, hopefully those red flags, which I pointed out earlier, of getting into poor quality, pure momentum retail play is something we will avoid. It does cause pain in the short term. It does cause underperformance in the short term. We feel disappointed. But as I said, having been through cycles, it is history has shown repeatedly that it is best to stick to quality because this is where the long term wealth is created. This is where the compounding is created. And you can clearly see that our analysis or our selection of stocks have been of the highest pedigree, which is demonstrated not by just our words, but by numbers reported by companies quarter on quarter. So with that, I leave you for this month. So our basic framework, as I said, is earnings, which you can see. However, it has to be supported by price or which is technicals. So next month, what we will do is we will actually review all your stocks on the technicals. And we will share that PDF also with you so that you get a very good understanding quarterly as to how your companies are performing in terms of earnings, how they are performing in terms of price, and how your portfolio has been created. This is something that we feel will help us to communicate with you much better in making you appreciate and understand our style of investing and creating your portfolio, because we feel that this philosophy is the center of our thought process, and this is how we really hope that we will be able to create big wealth for you over a period of time. So with that, I leave you for this month, and as I said again, stay safe and fingers crossed. Thank you very much.